Time for the business news now. Our business editor, Stephen Carroll, is here. Morning to you, Stephen.
Hello.
We're going to start off right here in France with some new figures painting a gloomy picture on economic growth in France.
That's right. The French economy didn't grow at all in the 3 months from April to June, according to new figures. That's down to a stagnation in consumer consumption and a fall in investment, those being linked to strikes at oil refineries in recent months. So that 0% figure comes after growth of 0.7% in the first quarter of the year and of 1.1% for the whole of last year. Now, the Finance Ministry says the figures are disappointing, but that they're maintaining their forecast of growth of 1.5% for 2016.
Let's move on to another story in the headlines. Plans for a new nuclear power plant in England to be built by the French energy giant EDF. They've hit another hitch, haven't they?
The €21 billion Hinkley Point project has been controversial for EDF, with unions saying it puts the firm's future at risk. The board of EDF narrowly voted to approve the plans on Thursday, but that was followed by a surprise announcement from the British government that it was to begin a new review of the project. Britain's business minister saying a final decision would be announced in the autumn.
Well, another busy day on the stock markets. How have things started the day here in Europe?
A lot of companies' news around for the markets to digest today. Let's start here in Europe. It's a mixed open on European share markets. We've got shares in the Brewer AB InBev up around 2% after they reported an increase in earnings. UBS, the Swiss bank, also up 2% after their earnings beat expectations. But that's the picture there at the open in Europe. Over in Asia, there was a lot of expectation around the Bank of Japan and what it was going to do to help stimulate the Japanese economy. It turned out the changes were just quite small, disappointing investors. We had seen Japanese shares fall earlier in the session, but they finished the day up 0.5%. The Japanese yen, though, up sharply against the dollar. The rest of the Asian markets, though, trading in the red. Some more of the day's business headlines for you next. Net profits at the British bank Barclays were down by a third between April and June. The lender took another £400 million or €475 million hit over the mis-selling of payment protection insurance. Barclays has cut 11,000 jobs since December as part of a cost-cutting plan being driven by CEO Jess Staley. Mr. Staley says the bank doesn't plan to make any changes to its strategy in the wake of the Brexit vote. Shares in Barclays up 2% in London. The owner of British Airways and Iberia says the drop in the value of the pound has cost it €148 million. IAG says its earnings also suffered from air traffic control strikes, which they say cost it €80 million. Nevertheless, pre-tax profits at the airline group rose by nearly 11% to €564 million. And Google's parent company saw its fastest growth in earnings in 2 years for the period from April to June. Revenues jumped by 21% to over $21 billion, driven by mobile advertising. But Alphabet's unit that handles offbeat projects like the self-driving car saw operating losses of almost $860 million.
Here in France, fears are growing for thousands of jobs at telecoms firm SFR.
Unions say that 5,000 jobs are at risk at the company, which has been losing customers at a fast pace during a price war in the French telecoms market. SFR, bought by billionaire Patrick Drahi in 2014, and he promised to protect staff numbers. Catherine Clifford has more.
1 employee in 3 to be cut from France's second largest telecom company. Union sources said 5,000 jobs are on the line at SFR. The company won't confirm the figure, but says it is reducing its staff number, a worrying uncertainty for employees.
It's sad because there are many people with great expertise who thought their skills would be put to good use in this company, who thought they could flourish here, have been sacrificed for purely financial reasons.
Patrick Drahi, then the head of a company called Numéricable, brought SFR 3 years ago. On the day of the sale, he announced the merger would go ahead with all existing employees on board.
We're going to bring together 2 companies with strong dynamics. We commit to maintaining all jobs.
But on paper, Drahi only promised to keep these jobs safe until July 1st, 2017. From then on, the company is set to announce voluntary redundancy plans. The first post to go could be in its shops. In 2015, the operator lost more than 1 million customers, reflecting stagnation felt across the sector. Most people in France now already have a mobile phone. Across the four main operators, the workforce has been scaled back significantly, going from 129,000 employees in 2012 to 118,000 in 2015. That's a 9% drop. At Bouygues, some 2,000 employees have left on voluntary redundancy plans, whilst at Orange, an average of 3,000 employees retire each year and go unreplaced.
And we'll finish up with some good news. Well, good news at least for Amazon, who are celebrating some even better news for their boss.
Yes, that's right. The online retail giant saw its revenues jump by 30% in the 3 months to the end of June. Amazon reported record profits for the second quarter of $857 million. That's thanks to both a boom in sales on its website, but also increased earnings from Amazon Prime subscriptions and its cloud computing business. Now, that news boosted Amazon shares to a record high in after-hours trading, which had the side effect of making its CEO, Jeff Bezos, the third richest man in the world. Not too bad.
Not too bad at all. Just after you. Thanks for that, Stephen Carroll. Only wishing made it so. Stephen Carroll, business editor, with the business news.